Good afternoon, ladies and gentlemen. Welcome to Magic Bricks Hangout series. Our endeavor is to trigger a buy and bring back consumer confidence in the real estate market. The topic of today's session is Decoding Union Budget 2016, How to Maximize Tax Returns Through Real Estate Investments. To discuss on the same, today we have Mr. Samir Kanabar, Partner, Tax and Regulatory Services. Samir Kanabar is a tax partner with a focus on infrastructure, EPC, pharma, aviation, and defense, clean tech, shipping and logistics, and oil and gas sectors at Ernst Young. He is a chartered accountant by profession and a prolific speaker. With over 19 years of experience, he possesses professional skills of structuring investments and exits from tax and regulatory perspective. He is an expert in advising on BEPS, transfer pricing, APA, exchange control regulations, structuring cross-border leasing transactions, tax litigation, support, tax policy, and advocacy. Samir has spoken and presented papers at several seminars and conferences and is a well-known amongst media. I also welcome Neha Nagpal. She's a senior journalist working with Magic Bricks. She has an experience of 10 years, over 10 years. She has been associated with and has written about real estate industry for over 7 years and has written about other industries such as franchisee and outdoors. Without any further delay, I hand over the session to Neha.
Thank you, Pushpa. I would like to invite Mr. Kanabar on the board and thank him for giving us his time. As a opening remarks, I would like Mr. Kanabar to tell us that since we know that the budget 2016 was just released and there are a lot of tax benefits the consumer has got. So, Mr. Kanabar, what's your view on the budget 2016 and how do you think that the tax exemptions what Mr. Finance Minister has given to the consumers, do you think it will really push the real estate market, the buying market?
So, I mean, very interesting question. Whether the budget measures will push the finance or the housing market or not, and that would be, I think, more driven by economic employment or employment generation, disposable salary in the hands of people, and of course various commercial parameters like pricing, etc. But let me first give you a different perspective. Whether this budget started with controversies. The first controversy was on PF, basically, where there is a lot of the dust has now been settled 2 days back by Finance Minister to say that the taxability of provident fund will be done away with. Obviously, we have to still see that in the piece of law. But the dust has been settled, but there was huge hue and cry. We were waiting for employees to go on strike, etc. But hopefully that didn't happen, and before that we could see a positive reaction. Second, we did see on the same day stock market crashing, coming down as the speech was on, and all of a sudden it recovered. So probably there were certain jitters which went out based on the speech that Finance Minister is going to spend huge amount of money, which means that there will be more tax being laid out, and hence the stock market started falling down. But as people started reading the fine print, I think again the dust settled, and people saw that there was only 11.5% increase in tax collection as compared to previous year as per the budget, which is not a very, I mean, 11.5%. If you put inflation of even 5-6%, we are only talking about another additional 5-6% being recovered by Finance Minister as additional tax, which I don't think is a bad measure, because he didn't increase service tax, which is again welcome move from real estate perspective, because service tax is a huge cost. So service tax has been not increased; it has been kept low or as it is, except for 0.5% being marginal increase. So from housing perspective, it's a good budget. If you look at REIT, if you look at affordable housing, if you look at no increase in service tax, increase in tax holiday for affordable housing. So per se, I think one can say that this kind of thrust on housing has never been there all along, and now this thrust has come. So from that perspective, I would put this as a positive from a housing perspective. From general perspective, if you give me 2 minutes, I would like to sum it up to say that the theme was Make in India, and given that the theme is Make in India, the objective is to generate employment, and as a result of which the incentives have also been rolled out for companies to engage or employ more people and claim more incentives. And obviously there is huge push for the rural sector reforms in terms of pushing the agricultural growth, because
Right.
historically agricultural growth has been coming down, and the
Right.
objective is to push the agricultural growth so that the spending power in rural economy goes up and that boosts the economy. So a lot of expenditure on fertilizer, on irrigation projects, which is very positive.
Right. So we're getting a lot of live queries here, and on our email ID and on our forum also we have received a lot of queries. The consumer has been sending us the queries. Let me just take up the first query for you. There's Vineet. He says, my father is retired from private service from 62 years, is on pension right now. He plans to sell his plot in Varanasi, which could raise a capital of rupees 50 lakh. If he does not figure returns, will there be any tax deductions if the money remains in his bank?
So, I mean, one has to see the transaction involved here, and the transaction involved here is a sale of land in this case. So, obviously, sale of land is independent of the age in that sense, because sale of land results into capital gains tax. So given that the transaction involved here is sale of land which involves capital gains tax, and the money that is going to be generated, which is 50 lakhs as we are talking, there
Right.
are a couple of things can come up. If this money can be productively invested in a residential house within a period of 2 years by buying a new house, or construct a new house within a period of 3 years, then this money, capital gains that arises from this sale of land will not be taxable. If this money is not, or this money can also be utilized to acquire bonds of public sector units. If this money is again utilized for that purpose, again, and that is the limit also, 50 lakhs per annum is what you can utilize for saving capital gains tax. So that is another benefit available, but somewhere this money has to get reinvested either in residential house or this tax-free bonds to save the taxes. Otherwise, his father will end up paying capital gains tax.
Okay. There is a query from Sandeep Patil. He's saying that how to get tax benefit while buying a multiple properties.
So, I mean, it's a very open query. How do you get tax benefit by buying multiple properties? Generally, you buy a property either as an investment, or as I said in our previous illustration or a query, that you would want to buy property to save capital gains tax. These are the two circumstances under which people invest money to buy property. I believe here it is the first scenario that somebody has surplus money to invest, and hence this gentleman is proposing to buy property, and that to multiple properties. So as such, I don't think there will be any tax savings available, because there is, as of now, no capital gains incidence in the hands of this gentleman. All that he can do is that he can sort of decide that this property which he's buying, and if he is able to take loan, housing loan, assuming that he's buying residential property, he is able to take housing loan, then if it is a property which is to be let out, which seems to be the intention because it is an investment, so it is not for his own purpose, in that case he will be able to claim actual interest that he pays under the housing loan as a deduction when he offers the property for tax under income from house property, and
Right.
thereby he can minimize his taxes. So best thing would be to treat these properties as property meant to be let out, accordingly determine the rental income, and take the actual interest based on the loans that he has borrowed and claim deduction of interest. And obviously, after 3 years, if he sells the property, it will be long-term capital gain. So he will be able to get higher returns after 3 years. And then again, he can reinvest that money to buy another residential house.
Okay. So we have another case here. There's a Suresh, one of the user on Magic Bricks is asking, I had purchased a flat in Gurgaon on 12th February 2007 for rupees 25 lakh and sold it on 8th March 2011 for rupees 50 lakh. To offset the capital gains, I purchased second flat on 15th April 2011, which was under construction. Now I got possession of second flat in 2013, November 2013, and he's planning to sell the flat. There will be not be any capital gains this time, and use the money for buying plot and construct the same. So he's asking when he can sell the second flat and buy a plot for construction, or will there be any tax involved in the same?
Yeah, so I think there are multiple transactions involved. So let us sort of try to break the transaction. The first transaction is he acquired property in 2007,
Right.
which sold in 2011.
Right.
Means it is being held for more than 3 years. So this will be long-term capital gains if any gains arise from this property, and there are gains arising in this example. So long-term capital gains arising from sale of this property, if they are again reinvested, which in his example, he has reinvested in buying an under construction property. So if he has invested in buying an under construction property, he has to invest this gains in under construction property within a period of 3 years. So long as he satisfies this condition and invest the capital gains within a period of 3 years, which I believe again is a reality because he has invested under construction within 2 years. So he satisfies the 3-year condition. So the capital gains arising in the first property will not be taxable because he has invested in an under construction property. Now he again plans to sell the second property which he has got it constructed and get into another property. Now if he wants to sell this under construction property, he has to wait for a period of 3 years, and then only, and if he wants to sort of save the taxes, so once he waits for a period of 3 years, then it becomes a long-term capital gain if he sells after a period of 3 years. And then if he is again planning to reinvest in a larger plot of land and construct a house, he should again be eligible to save capital gains tax as well on the second property. But if he doesn't wait for a period of 3 years, then that will be a challenge for him and he'll end up paying tax.
Okay. Okay. So when we talk about end up paying taxes, would there be any percentage, since he's already mentioning the cost of his property and what he's selling it at?
Yeah, so I mean the tax rate, if it is short term, it will be 30%. If it is long term, it will be 20%. So depending on the period for which he is holding, the tax would accordingly apply.
Oh, okay. I have a query from Rajiv. He's saying, I'm working in private company. Want to buy independent house on name of my parents. Can I buy that on loan and claim the interest paid and principal in tax exemption?
A very interesting question. Incidentally, the law recognizes the loan and property being held by the same person. The moment you delink the loan and the property, and there are two separate individuals, this gives rise to an inconsistency. And in that scenario, what happens is that typically, if the house is in the name of parents, but the loan is taken by him, since the property belongs to the parents, the property will either be shown as occupied by the parents or let out by the parents. So parents will earn rental income, but the loan is borrowed by him and he will be paying interest. So his parents will not be able to claim this interest on the rental income which is being shown as let out property. If it is occupied property, then there is no question of showing any rental income because it is self occupied. But even in that case, there is a limit of 2 lakhs to claim this interest deduction, which will also be not available because interest and loan is being paid out by the son. So ideally, and of course, I commercially, I believe, I'm not sure whether the bank or housing loan company would give loan in his personal name when the property is in the name of parents. Maybe they may give it, but assuming they give, still this challenge remains. So ideally, he has to be either on the payroll, or it's not on the payroll. He has to be in the his name has to be shown as an owner, and he can say that while his parents' names are also there, but he is 100% owner. In which case, he will get 100% interest deduction on whatever interest is being paid out. If he is partial owner, then he'll only get partial interest.
Right. We have got a general query from a user. He's asking, I would like to know what all tax benefits I have got as a real estate buyer in the budget 2016. Would you like to take this up?
So as a real estate buyer, the tax incentive one available is from an affordable housing perspective. So if he's a buyer and if the value of property is less than 50 lakhs and the loan that he borrows is less than 35 lakhs of rupees, then he will get, and assuming that he's using this property for himself, then he will get extra 50,000 rupees as interest deduction because there is a cap for claiming the interest deduction. Obviously, if he is letting out the property, then he will get entire interest. So there is nothing new if for people who want to let out the property. What is new is that if he is able to show this as self-occupied, then he'll get 50,000 rupees extra over and above the standard of 1.5 lakhs. The other incentive available is that this interest deduction for self-occupied property was available if you are if you are able to get the possession of the property within 3 years. If you don't get property within 3 years, then the interest deduction was restricted to 30,000 rupees. So the relief that has now come in this budget is that the 3-year period has been extended to 5 years, which means that he has now 5-year period to go for an under construction property as well and still claim the additional interest as deduction as we discussed earlier. Apart from this, the incentive that would be available is that in an affordable housing, I think the pricing of the house, it is not tax, but it is very commercial, that because the developer also will be able to claim certain tax holiday on the property that is being developed, the price may be accordingly sort of adjusted or marginally reduced for the tax holiday that the developer gets. So obviously his pricing or the purchase price may be marginally better in an affordable housing scenario.
Right. So, great, sir. I think those are quite a valuable insights for the real estate buyer, that how they can really, maximize the tax returns on the through the real estate investments. Let me take up the next query, sir. This is Ajay Bhatia. He's saying, how can we manage the long-term and short-term capital gain tax? Can two people get tax exemption on the same property? How to get tax benefit while buying multiple properties?
Quite a confusing question. So let's again break this question. One is that
Mr. Kanabar, can you hear me?
I think we are facing some difficulty.
It shows that you have mute, Mr. Kanabar.
Neha, you there?
Yes, I'm there, Pushpa.
I think we are facing some difficulties in the connection, due to which we will start the session with a delay. So just allow us some time to rectify the issue. We'll be going live soon.
Sure.
Yeah.
I don't know, sir. I think you have to click on the link once again, rejoin once again.